Good day, all. Ira Epstein of Linn and Associates with your metals market wrap-up, and we are now on Monday, the 18th of November, 2019, just after 3:30 p.m. Central Time. Well, as you can see, an update today in the silver and the gold markets. Copper was down, the other metals fairly flat. And what does it mean? Well, the question is the market worn out a little bit, especially in silver, this break, and is it ready to move back up by losing an embedded reading? We'll get to that in a minute. The stock market, every time I'm on TV, it appears there's a brand new high in these markets. I was on today talking about that. And there's a point at which, money's got to come off the table, too. I hate that everybody's so one-sided in stocks. That generally sets up a situation in commodities where out of nowhere you get corrections. I am not calling a top. I am saying on breaks, I would not recommend just jumping in after big rallies to the upside. I'd recommend some patience. And what I do realize is there's so many people that aren't in the marketplace, and they're scared that they've missed something. When we come to the gold chart on a weekly basis of closes, the lowest close we recently had was 1462.90, and that was, if we take a look, that was back here on November 8th. So right now, the market is extending the gains from last week, but that is so far your low close in the market. When we take a look at the chart action, today's interesting. We had a day where the market felt, for the first time in a while, like maybe this decline has run its course for the moment. Now, to me, an outside day means what? We should not take out today's low for the next 2 trading days. If we do, I'll view this as another bull trap, and I'd be looking then for the market to see how far down it wants to capture people as they start getting into what I'll call something of a panic stage. I would have liked to have seen the rally extend itself over the 1475.50 level, and let me explain why. That would then give you the situation of higher lows and a higher high. The first step in breaking this downtrend that began here at the 1520 level and has dropped about $80 an ounce. Haven't done that yet. Where's the resistance? If you take out the 1475.50, you've got 2 levels of strong resistance, 1484.70, 1486.40. And while it doesn't sound like a lot from where you're at, that'd be a $40 rally off the low of just over a week ago. So I would look for that to be something of an important area over the next few days if it got up there. Now, should I be moving shortly to the Fed contract? The answer is absolutely yes. We're at November 18th, and I'll be doing that as I see the open interest move. If we take a look at the Bollinger Bands, you would run your Bollinger Bands on the washout right through here, got back, if you'll recall, to the right-hand side of them. Let me see if I can get this to come back. And I'm not able to just yet. Here we go. This will do it for us. Now we got it. You can see how the market had gotten extended here. And we had several days in a row of closes underneath, as you can see, the lower Bollinger Band. You had closed on this day at 1453.70, which was just over it. You had 3 days prior to it. And now you're getting what I call that reactionary move back in it. And the question is, will the market get up to that number and decide what's next? That's what I think it might do. You're oversold. A rally would help correct the oversold condition. You need to get this D line. The red is called the K. The D line is the dark one. You got to get that over 30 to get it out of an oversold condition the way that I teach charting. So I'm still looking for that as resistance. Take out today's low. I think you're putting into play the 1445.60 level. What about GLD, the popular ETF? Well, the pattern is still one of lower highs and a lower low. Like the futures, if you can get back and over right here, this high of 138.94, and you'll notice today's high was 138.85, you break the pattern of lower highs, lower lows. You're correcting an oversold condition. I'd still look for serious resistance between 139.40 and 139.79, but I would say that this leg of the downtrend is then ended. If you don't take that out and you get under 137.97, you may be putting back into play the 136.14 area. Let's go to first now the juniors and the gold miners. They're sitting up here right at the resistance level. 37.67 to 69 is the 45-day average of closes in the 18. Those are what I look at times. The 45 or the 50-day, it depends which one you'd want to use. I don't consider as important as the 100 and the 18, the green and the red, but it's important. And if you take a look, the market came down, got through. I can't, unfortunately, get this to activate, but that's not a problem. Came through that low, back up and right into the resistance area. Take out the 37.73 and you might be able to kick that to the upside. If you take a look at GDX itself, it lost its downtrend last Tuesday. It is when this whole decline, you had an outside day up against the lower Bollinger Band. If you take out that low, then I got to go back to the drawing board. That's not a turn of trend. It's the end of a wave in that market. The market's now challenging the 18-day average, and that's where you seem to be stalling out. And so often you'll hear me say that, line in the sand. In the gold-silver ratio, you made a short-term top in this 87 area, and you're getting a little bit. I want to phrase that, a small correction. If you break much, maybe a $2 to the 85.18. But that also means that silver's interesting. And silver today, if we take a look at the slow stochastics, you have a number at 21. Now, if we go back to yesterday, both numbers on Friday were under 20. The day before, they're under 20, and the day before. So I have an embedded reading according to what I teach. You lost that today. In addition, you have an outside day up. The odds favor that as long as today's low is not taken out, high probability of getting back to the 1723.5 zone, which is the 100-day average. If you exceed that, the next resistance, 1743.70. I think today was a warning sign, maybe a big one, that this correction from 1840s has run its course on the downside at this point. In the copper market, every time we don't get a deal, or it sounds like a deal's not happening on phase one, copper gets slammed. When we hear there is a deal and things are going well, copper moves back up. So what it's done now is it's correcting into the lower Bollinger Band. It's fighting a battle between the 100-day average and that number. The trend has been down. Today we have an outside day down in an oversold condition. I think the pros are going to look to take some money off the table against that lower Bollinger Band if they're short, given how oversold it is. And what you don't want to see is today's highs taken out if you're in the bear camp. In the platinum market, you went down to the lower band. You sliced right through the 100-day average. You went to it. You stopped for one day. Then you went there. And you've been playing now in between these numbers. You have an oversold condition that's never embedded. Could the market rally a bit more? Yeah, but I'd look for the resistance between right now where you're at to the 18-day average. Unfortunately, because you're oversold, I don't think you're going to get big shorts in the market. I think that they're taking money off the table, not adding to them. And I think in the palladium market, an inside day is just a stall. Again, this was a pretty important area for a top. The market is pulled down. Take out this high of Friday, which was an outside day down, and then you break the bear pattern and maybe you get back towards that 18-day average to figure out where the market goes next. So the metals are at a very interesting point, and I think that I'm going to be writing about them in detail about it. And if you haven't seen my research, it might be something you want to consider. Twice a day, I write a Monday through Thursday commentary. Then Friday in the morning I write, and for Sunday night I write again. You can get my commentary through our different subscriber videos. You can get them through my commentary on our different software platforms. There's different levels we have: commentary only, video subscription only, or everything, commentary written and videos all tied in. And this is what a typical newsletter looks like. It's not lengthy. It's not meant to be. I'm going to gear in on what I think is important, and then I can use the video in the morning, which I put out typically, I'm recording it between 5:30 and 6 a.m., so that the traders get a feel for what the day's activity might hold, what they should be looking at, and I put you on a path of direction. To get a free trial, if you haven't had one, call my staff. They'll get you set up right away. You can go to our website, and on the website you'll see free offers. Go in there, you just sign up for it, or click up here. Hope you take advantage of it. I'm Ira Epstein, and I'll see you tomorrow.